Hey everyone, I'm Shawnee Walker. Thank you so much for joining for this quick training on preventing financing pitfalls, how to keep deals alive from contract to close. This is such a good thing to watch as an agent just because you a lot of times may not know what is going on with certain lenders if they're not being great communicators. You might not know what is happening. This will give you the tools that you need to ask the right questions and get responses that actually will tell you, do we have a problem? Are things going well? What's happening right now? So without further ado, let's go ahead and get into it. The most important thing about this is that, everybody has had deal failure in the past, right? This happens. It happens to all of us. Loan officers, realtors, things fall through the cracks. We don't always catch those things. So we're going to look at financing failures versus preventable fallout. So like what can the pros control versus buyer mistakes, like, maybe they didn't know it and they went and financed a car, or they went and financed their furniture, or, they had a huge debt that they did not tell anybody about. So those things are all super big mistakes that could cost the deal. And what can your buyers do and what can your partners do at lending institutions to kind of cut out the likelihood of those mistakes from happening? Here are the real bottlenecks for financing. As an agent, you often see the symptoms, but you're not seeing the root cause, especially if a lender is not telling you, frankly, what's going on. And there's a lot that, as lenders, we're not allowed to say because of the client confidentiality rules, but let's just go through these. So buyer qualification issues like income, job changes, credit surprises, loans that we didn't know about, private loans, things like that. Asset problems, so unverified funds, large deposits, appraisal gaps, title insurance issues, and homeowners insurance issues and mortgage insurance issues. Like all of those things can come up during a loan and cause problems. Then debt to income ratio changes mid-contract. We had a pre-approval literally yesterday, and he said, oh, by the way, I just got a new truck. I don't think it's showing up on our credit report yet. I'm like, okay, cool. We've just gotten all of your documentation. We've sent you a pre-approval letter. And now is the time that you tell me that you got a new truck. Um, that happens. And I feel like it happens more often than people think. It's crazy. It's crazy. They get so excited about having either the idea of buying a house that they go out and get a new vehicle, but you guys know this. So purchases, like cars, furniture, other things that they're financing, that show up, late payments, that this is not part of this list, but like credit issues where they're suddenly late, 30 days late, 60 days late on a credit card, and their credit score tanks. I mean, that has definitely happened to us. Once or twice in the past. And then rate changes. You guys, this is a big one right now. Rate changes are happening because of the fluctuation regarding the economic outlook for the foreseeable future. With the war, the war, anytime there is a war going on, typically inflation goes up. And when inflation goes up, rates also go up, typically. And so that can affect people's pre-approvals, and it can affect how much they can afford. Lenders should be making sure that they're going through their pipeline on a weekly basis at least, and making sure that those people that were pre-approved through them still hear from them, first of all, and second of all, are still pre-approved. Like, has anything changed? What were they pre-approved at? What was their interest rate at that time? All of that stuff matters. The pre-approval level from start to finish is first an application comes in and we do a pre-qualification. A pre-qualification just means we pull credit and we look at what they say their income is. Now, I don't want to freak you out, but unfortunately, a lot of the big name lenders out there, a lot of the online phone call centers that they have, those people are not pulling documents. They're not requesting documents, yet they're sending pre-approval letters. I've had numerous people that came to me for a second opinion just in the last 6 months who told me, my other lender didn't ask for my pay stubs. Why are you asking for my W-2s? Why are you asking for my bank statements? And I'm like, but you were pre-approved through this other lender. What do you mean they didn't ask you for these things? So what these lenders are doing is they're really just, it's an assembly line. How fast can I get through this application? And the fastest way to get through an application and send a letter is pull credit. Is the credit decent? Does the debt to income ratio work for what they stated their income is and move it on down the line. And, you know, if they go under contract and they end up using me, then I will deal with whether they actually qualify at that point. That's a terrible way to do it. So I never do pre-qualifications. I think that that's crap. You just, you know, crap in, crap out. You're not going to have a good experience. So, um, I don't want to set somebody up for failure. I don't want to set them up for having to spend money on inspections, appraisal, and then find out that the underwriter says, oh, I'm sorry, they don't actually qualify. It's a terrible way to do things in this business. And it's also a good way to make sure that, you know, agents don't want to ever send you business again if you screw up a deal like that badly. So a basic pre-approval going on down the line, that's where we've reviewed some documents. You know, we've asked for the basics, pay stubs, bank statements, things like that. And we've reviewed them, but we haven't done a detailed underwriting of the loan. A fully underwritten pre-approval is the strongest way that you can go. And it is where not only are the customers pre-approved by someone like me, a loan officer, but they are also, their entire loan file and documentation goes ahead and gets sent to the underwriter. The underwriter reviews it, they pull the fraud report, they do all of their normal underwriting stuff, make sure that it actually meets the guidelines for the loan program, and then they give you a fully underwritten pre-approval letter. And that is the absolute strongest thing that you can get. So if your lender will do that, which we do this, I know some other lenders do it as well, that is the best thing that you can get. You should ask for that. As a realtor, if you've got time, if your buyer is just kind of getting into looking around on the market and they're not like super gung-ho about putting in an offer today, try to get them underwritten upfront just because it's going to make their process a lot faster. You might be able to close faster, and it gives you guys all peace of mind. So red flags, you know, you could ask, has your lender reviewed your income, assets, and credit documentation yet, or have they just pulled your credit? That will give you the best idea of like, even though I'm looking at a pre-approval letter, have they actually been pre-approved, or is this just a pre-qualification? If it's just a pre-qualification, it doesn't mean that they're not approved, that they can't be approved. It just means that their lender hasn't done the work to pre-approve them. And they're not being transparent because they're sending you a pre-approval letter, even though it's not pre-approved, which I don't agree with. But I guess you do you to all of the other lenders that decide they want to do that. I think it's crazy. Online only pre-approvals, you know, like I'm not going to name companies, but people will just want to go just to their phone, not speak to anybody, and get a letter. And those things sometimes can work if the customer is pre-approvable, but sometimes those online situations think that you are better than, you know, what you actually are able to get. And it's because of the way that the application was filled out. Like, I have an initial phone call, what I call an introductory call, with every single customer, and I uncover things that would absolutely kill a deal during that phone call. But if somebody's not having a call like that with the customer and they're just putting their information in online, that person's not going to, that company's not going to know these things. And they are going to go through the process of probably pre-approving them. And then they're going to get into underwriting and they're going to be like, oh, so you just switched from W-2. You've been with this company for 3 years. You just switched from W-2 to 1099 a month ago. Okay. Well, now we can't do the loan. And how far along are you in this process at this point? Probably 3 weeks, 2 weeks, something like that. So, you know, it's so important that the lender is not just online. The loan officer needs to be asking questions. The loan officer needs to be talking to them. It's so important, you guys. Okay, so here's the danger zone for the different weeks throughout the process. Inspection and appraisals are ordered, of course, during week 1 to 2 after the contract. Common issues and during that time are going to be appraisal delays, conditional loan approval issues coming out, issues with inspection, things like that. Then from week 2 to 3, and I guess condition issues meant like condition issues of the house, not conditional underwriting. Getting my words mixed up here. Weeks 2 to 3, underwriting review. The common issues, of course, are conditions that are piling up on the customer. They need to get the documents in to the lender. Again, if they are pre-underwritten, this can be done before they ever go under contract. And this part of the process, they're going to be like, get me a cocktail. I feel good. We don't have any stress right now. Everything's all done on our part. We're just waiting for the appraisal to come in. Final weeks for the clear to close, the common issues there are last minute credit checks. So, lenders should be always telling their customers, don't go out and spend money on a credit card, or don't go out and get new credit debts or anything like that. That's so important. It's in every single one of our processing emails that goes out for conditional underwriting approval. And then employment verification failures, you guys, it is a real thing that people quit their job like the day of or the day before closing. And lenders check on that. They definitely do a final verification of employment. It usually happens the day of closing. So, if you've ever talked with your buyer and you know that they are thinking about changing jobs, but they're just waiting to close on their house, please make sure that they understand that they can't do that. That's just not allowed. Right. Finally, the biggest pitfalls tend to be that the buyer goes silent or is very slow with documentation. They can also put their heels in the dirt about certain documents because they don't understand why it's needed. And the loan officer may not be good at explaining why those things are needed, especially if they're new. And usually, with good communication, the loan officer is able to get the customer to understand. But with poor communication, the customer is just going to have a crappy experience. If you as the realtor doesn't check on the progress with the lender and, aren't certain, has the appraisal been ordered? Do we need this type of inspection or that type of inspection? What else is needed in order to get this thing closed? Lenders should be telling you those things kind of upfront just to prepare you of what kind of work you're going to need to do to get the deal done. And then assumptions instead of confirmations, it's so important just to communicate properly amongst all parties, and keeping the deal flowing smoothly is, going to happen if communication is present. So that's super important. All right, this is one of my favorite slides for the whole presentation. Avoid the top 10 deal killers. So job changes, we always, as lenders, check this before closing. Large deposits, we need to document these immediately if we see them on bank statements. New credit purchases, as an agent, feel free to talk to your customers about this. I'm sure a lot of you already do that. Just say, hey, just as a reminder, I know you're excited about the house, but just don't buy anything new on debt without talking with your lender first. Low appraisals, woo, we've had a couple of these lately. So if you, as the buyer's agent, know what the comps roughly are in the area, and you know that you're going in kind of at the top of those comps and asking for seller concessions, have a strategy in place for renegotiating. Talk with the lender like, hey, if we don't get these seller concessions, or if the seller concessions fall through because of a low appraisal, what's going to happen with this customer? Are they still going to be pre-approvable? Can they get a gift from somebody? What's going on? That's super important. Missing documents, you guys. Like, first of all, there should not be missing documents because the lender needs to do their job up front. But during the process, if there are missing documents, meaning the borrower's not doing their job to get the documents to the loan processor, your loan officer needs to be calling you to tell you, hey, I need your help because our friend, customer John Smith, is not complying and getting us his documents. So I need you to tell him how important this is, because if not, he's not going to get his loan. So that's important. Debt increases, that's more of like a conversation that the lender should be having, just making sure that you're communicating correctly, that, hey, don't spend a whole lot of money on your credit cards, because then your payments will go up and you might not qualify. Insurance surprises. Oh my God, this is, to me, one of the biggest deal killers that we've had the last year. And it's getting better, I think, as more insurance companies come back into the state of Florida. But quote these policies as fast as possible. The moment that you guys get the inspection report back, get the customer to start reaching out to insurance agents for quotes, because especially on older mobile homes or unique properties or properties that have some issues that we think we can get through an appraisal with, we need to make sure that they're going to be able to get insurance. And that insurance company, once they choose a policy, I don't know how many of you know this, once the customer chooses the quote that they want to go with, the insurance company still has to underwrite it. So the borrower has to say, yes, I want to go with that policy. Then the insurance agent has to submit it to get bound. And then the insurance company has their own underwriters that review the policy, review the property, review the inspection, and say whether or not they will do it. And we have had tons of people that loved the policy quote that they got right before closing. The insurance agent finally submits it to get bound, and then come to find out the insurance company won't even do it. So big problems in the insurance world. Make sure your customers not only quote early, but once they decide on a quote, it needs to get bound. They need to bind it as fast as possible. So, so important for closing on time. Okay, HOA and title issues. Obviously, these things need to be ordered early. Rate volatility. Your lender needs to be discussing a rate strategy with the customer from the get-go. Hey, we're going to float your rate because of X, Y, and Z. Do you think that's a good idea? Are you okay with that? Or, hey, we're going to lock in your rate the moment you go under contract because of the volatility in the market. Is that something you like, or are you more of a risk taker? Do you want to float this rate for a few weeks and see what happens? So that discussion has to happen between the lender and the customer. And you can ask your borrower, your customer about it. What's your lock strategy with your lender? And they'll probably look at you and be like, what? Because a lot of lenders don't have that. So make sure that you talk with them about it, and make sure that they are talking with their lender about what their lock strategy is. Finally, last minute underwriting conditions. Basically, you guys, what happens is the loan goes through initial underwriting review. The processor collects all of those conditions for the underwriter. Once we get the appraisal in and we get all of the conditions from the customer, which is why it's so important to get them fast from the customer, we send the appraisal and the conditions from the customer back to the underwriter for final review. That final review is where the underwriter might say, oh, well, now I've got questions on X, Y, or Z. We need this document or that document for this to comply with FHA guidelines or conventional guidelines. And so those are the last minute underwriting conditions that can come up. Usually that's closer to the end of the loan. So just, if you hear your customer talking about, oh my God, they're asking me for more things and it's a week until closing, just tell them that's normal. It happens, unfortunately. But the faster they get documents to us at the beginning, the sooner we can get them final approval, usually. All right, so as realtors, you guys are the deal quarterbacks. You are the ones that have to vet the lender. Not all of us are equal. We do not all do the same things. We do not all, do pre-approvals or underwrites. Some of us do pre-qualifications apparently and call them pre-approvals. So vet your lender. If it's not somebody that you have worked with before, ask those questions like, has your lender asked you for your pay stubs and your bank statements and your income documents yet? Or did they just pull credit? Very important. Set your buyers' expectations early with what to expect during the process. I tell buyers all the time, I am your professional expectation setter. I will also be financing your home, but first and foremost, my job is to set your expectations correctly for what we are going to see happen during this process. Stay involved in the financing conversations throughout the process to make sure that you know what's going on. I know most agents that I work with don't have a problem with this. We chat each week, we talk about what's going on, updates, anything new. And it's a quick 5-minute call, but you guys, it makes all the difference. Track milestones, not just the dates of did they actually get conditional approval on this date or not? When did the appraisal get received? When did it even get ordered? When, if a survey is needed, when did that get ordered? What are the milestones throughout the process? You should know those. If you don't, get with me and I'll help you. And then push your lender for speed and accountability. So that's super important. They should not just be speedy. They should also be good at their job. Okay. All right. And then finally, how can I support you guys? If you already work with me, thank you so much. If you don't work with me or you work with me every once in a while, please know that I am going to be very communicative throughout the process. I started a team back in November of 2024, I believe. Yep. 2024, and we have flourished. We've created an incredible repeatable process for every single customer. Every single agent gets the same type of communication from me during the loan process. So if you want to know more about how I do it, like I will show you all of my systems, you will be absolutely floored. I've never seen anything like this in the industry, and I'm so proud of it. So if you would like to work together, that's what you can expect for sure. We do upfront underwriting on so many of our customers just because a lot of our customers are getting down payment assistance or they've got questionable income situations and things like that. And so we don't want to be the ones to cause you problems in getting your commission at the end of the day. We don't want to be the cause for somebody not getting their home. And in my opinion, the only way to do that is by making sure that the customer gets pre-underwritten before they ever shop for a house. So we do that all the time. We are a very quick turnaround for our conditional underwriting. So that's very important with getting deals closed on time. And then deal assessments. If you know me, you know that I'm one of the most transparent, even to a fault, individuals, and I will send deals away if I know that I'm not going to be the best fit for a customer. Maybe because they can get a better situation elsewhere, or something about their situation would be better fit for a community bank or something like that. So I am very good at having the uncomfortable conversations. It's not something I ever thought I would be good at, but after the 8 years in the lending industry that we have had from 2018 until 2026, where we're at right now, I've had to get really good at difficult conversations. I have them all the time. I will tell you what is going on as much as I possibly can without going overboard on client confidentiality information. So honest deal assessments, you can expect that from me. We've got a solid workflow. We're honest. We communicate, and your clients are never going to be in the dark. So that's how I would like to wrap it up. Thank you so much for taking this time to walk through this training program with me. I hope this helped. If it did, and you know another agent that might benefit from it, please share it with them. It's a YouTube link, and I would appreciate you guys giving me a call and letting me know what you think of it. Thank you so much. Bye.